Ajay Srivastava of Dimensions Corporate Finance Services joins us right now on the show. Ajay, good having you. No, I must assure you that you and I both, we're not too old for this. Ajay, just wondering though, the kind of falls that we're seeing, are they taking you by surprise, Ajay, or now this is the realization that what people thought about buying the dips because this will get cured at some point of time was probably not the right assessment?
Well, it is history to that extent. One can delve into history, what one did, what one didn't do, correctly, wrongly. We closed our short position, went long, closed them. But I think the important thing is now to assess that where do we go forward. I think lots of people can say, oh my God, this is the best charting opportunity in the world. It was staring in the face, but none of us believe that this coronavirus problem could be so acute. So let's be honest about it. I think the key question now is, what do we do at this point of time with what we have? And what is the time when you go back, and go back with what intentions? I think that's more important, because lots of people are waiting to go back to recover the money. And that's the most dangerous phase of the market, because that can give you bounces which can really knock you out. But I still believe, and that's very important, that more than just analyzing financial markets, you need to analyze your state of mind. I think most investors should see what is their comfort level. Can they take bigger risk in the equity market? We don't know which way this is going, but it's up to each person to visualize. Not that do economics that Reliance will go up, HDFC Bank is greater, but the fact that can you sleep well with your portfolios? And I think that's an answer you got to take for yourself, each one to himself. Having said that, I think in a scenario like this, there is no advisory to say, it's the best time to buy these stocks, best time to buy that stock, because it doesn't matter anymore what stocks you're carrying. When the markets are shut, see, what's changed in the dynamics is the markets are shut, which means that the consumer buying is now strangled at the hole like this. So the money coming into the economy pipeline is going to be really small in the next 2 to 3 weeks, as every mall, shops, establishment, dining, everything gets shut down. Now, in that preparation, it doesn't matter whether you are a Nestle or whether you are maybe Nestle will have less damage because you buy Maggie's and stock it, or you're a Bajaj Finance because EMIs will not get paid. I don't think anybody is going to borrow fresh money to buy vehicles at this point of time. So till we see the clear path of consumer shops opening, I don't think there is a need to go buy in the market at this point. It doesn't matter what the share price is. But till that pipeline does not open, that's one. Number two is we believe recovery will come from the US market. Unless US stabilizes, and it did stabilize yesterday for a minute, it looked good. It closed well yesterday. In fact, one of the stocks, Amazon, closed in the green. If US stabilizes, I can see that India will follow suit, so the rest of Europe and India will follow suit. But till US doesn't come, so our path is your own mental comfort, consumer market opening, US to stabilize, and Indian government response, which I'm sorry, at this point of time is lacking. It can be made up. But this has been a very disappointing week as far as the government response is concerned.
Ajay? I just want to say that I think I somehow believe that Ajay Srivastava is making such an important point that instead of trying to look at our prices, try and wait for stability in the US markets, and maybe it starts with the dollar first and the dollar strength that is likely to happen to look at first, and wait for the US to stabilize, because if the market is not stabilized, how would we ever look at any kind of stability, Devina?
Yeah, that's true, and that's what we've been tracing, right? We've been literally mapping what's happening in the US. But Ajay, point to that is even in the emerging market basket, if you were to take a look at the kind of incessant selling that's come in, India, by virtue of being a liquid market that offers that liquidity to foreign institutional investors, that they can come and sell lock, stock, barrel as and when they want, is probably one of the reasons why we're seeing this kind of exaggerated sell-off from the FII desk. You've got markets like Philippines which are shut. Few markets are not all that liquid, the likes of Vietnam. So therefore, do you feel that this sell-off doesn't justify the actual impact on the economic growth in even, say, for that matter, the full year it's priced in?
You say economic growth. Did I hear, Devina, the word economic growth? I think we are in a recession. If the market is shut, which growth are we talking about? It's not going to happen. We are in, we may not recognize it, but fact on the ground is that whether all other economies, not only India is not the only one, we're not pinpointing, but if the markets are shut, which growth are we talking about? There is no growth. We are in a de facto recession at this point of time. Ask the companies, ask Titan, the showrooms are shut. Ask the retail stores. You're talking of future just now. I heard you. The stores are shut. High street is shut at this point of time. So where is this growth coming from? There is no growth. I think we are not factoring in, and I think that's why I keep saying that we're not factoring in what's happened at the retail end in India in the last 48 to 72 hours. India has just shut itself like the rest of the world, and maybe to a larger extent, we have bigger shutdowns than even Singapore has at this point of time. So I don't think there is a growth here. And as for your point that, in the great market, liquid market, you're right, absolutely correct. We are a great market, large economy, good quality stocks, everything held firm. But we ignored the fact that lots of the overseas position and Indian position was sitting on leverage. The future market is leverage. The global market was all borrowed money at low interest rates and ending up in investments. Now, when this risk off went on, people need to pay back the loan as quickly as they can. It doesn't matter what price it is. It's like your margin call. Your broker doesn't wait to talk to you about your margin call. He sells. And so I think the leverage is moved out. Now the question is, with the 1 trillion stimulus coming into America, how soon does that cash flow enter the system? And when they enter the system, it will open the path. Still doesn't take away that India needs to open the retail shops. And when it opens, for the cash flow to start coming in. So we are not factoring in. Our model is simply saying that this will be a negative. It will be a recession, 100 to 200% be a recession. We need to be ready for it. And as I said, some may withstand, like Nestle may withstand better. ITC may withstand better. Some of the smaller banks may, literally go down the tube at this point of time. And that is where I said the link is the government institution. If you don't have a TARP, if you don't have this thing, this meltdown is huge. The EMI defaults. Look at the last one year. Where has the loan built up been in banks and financial institutions? It's been the retail loans. Yeah. Retail loans can't be paid if markets are shut. So I'm not saying doomsday, but I'm just saying it's not as simple to say that if the US guys have the money and India has a great market, India has its own set of problems and an own set of responses from the government will dictate how much money travels back to India.
I completely agree, Ajay. Where I was coming from is that this is at some point going to sort itself. At least, the coronavirus, it's a time-bound event. We will pass over. And therefore, if shops are shut, retailers have shut us down, it's going to be for this period of time. So while obviously curtailing growth projections are a must, maybe extending it to a possible recession, could that be slightly overstated?
Of course not. I can tell you, I'm not being alarmist, but I can tell you over 50% of Indian corporates will be in IBC in the next 3 months. They can't pay the suppliers. And the threshold of IBC is 1 lakh rupees. You don't pay a supplier 1 lakh, he gives you a notice on IBC. More than half the Indian corporates are going to be in IBC. So unless the government puts a moratorium and says 6 months nobody can go to IBC, you'll find a whole host of creditors moving to IBC to claim their money back. That's what I said. It's a cascading impact. You can't pay EMIs, your credit score goes down. Now, how do you re-borrow money again? And then your vehicle repossessions and all kind of nonsense will start. The truck owners can't repay back the trucks. What do? Impound the trucks and do what with them? If the corporates can't pay the suppliers, at least the smaller one, they will end up in IBC. IBC issues notice, CRP gets appointed, end of the story for the company. And most small and mid cap, as we have seen in the past, will go into liquidation because there is no buyer of these companies by and large. So it's not as simple to say when the shops open. Like we saw demonetization. What is shut is shut. If you've defaulted, you've defaulted. There's no way that in the next 3 months when the shop opens, you will recoup these sales in the next 3 months. Everybody, whenever the shops open, will go back with a net worth which is much lower than what it is today, with cash flows more uncertain, business uncertainty much more on their jobs. They will not go out to spend money, double the money or triple the money if they have not spent in the last 30 days. They'll say, let's go spend it. Again, having said that, some will withstand better. A PVR may withstand better and Inox may still do better because Inox is no leverage. But people with leverage are going to face much bigger trouble as we go down the path than people with no leverage. So if you were to distinguish companies to look at, I think it's very clear basket all over again. No leverage is good. Leverage is going to be a problem unless huge dispensations come from the government.
Ajay, a no-brainer of a question, but I'm still asking you. Therefore, by virtue of all that you said, are we too early in trying to assess the damage that this can cause? Let's give it time because that's the only thing we have in our hands right now.
No, I think neither to that extent, I think we're too early because we don't know when it's going to open up. We're in the first stage of closures at this point of time. We don't know how bad the pandemic will be, government response will be what. We have no clue at this point of time. So I think it's too early to assess anything, because for the simple reason that, one, on the health side, we don't know where we're ending up. And on the other side, which is the economic policy and the dispensation side, there has been no government action so far. Just to share with the viewers the news, UK and all, which are so advanced, are in extremely serious trouble at this point of time. Medical, my own daughter, the doctor there, she's with the corona team, she's down with COVID at this point of time. But they don't have equipment to handle. Can you imagine if India doesn't control it well, what's going to happen? So I think not only we are too early, we have been too optimistic about the scenario to look at economic revival when there is a bigger health issue sitting in this country. And that's why I tell to investors, if you want to invest, you need to have surely able to sleep well in the night, because we don't know where we are going with this. Or if financial analysis is out, mental strength is in.
And I think this is important and pertinent. I was reading in the Times of India that 26,000 Indians are getting ferried in from the Gulf, and we are hoping to quarantine them. And we've heard reports of how Indians are escaping hospitals from where they have been quarantined in the first place. So I think Ajay's point is well taken. I mean, Ajay, thanks so much for a really frank discussion today. And the reason I bring this up, Ajay, that it is a very frank discussion is because we are all worried about what will happen if this resolves itself and prices move up. What if it actually gets worse and the crisis deepens? And I think nobody's taking stock of that, and therefore your conversation has been important today, Ajay.
Thank you very much, and I hope we all go well in life. And this as Devina said, this shall pass. I hope sooner than later.
Yeah, indeed. Thanks so much. Really appreciate your time today, Ajay.
Thank you very much. Have a good day.